And it's a new week. Welcome to News Express right here on Africa Business Radio, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. A lot of really catchy headlines hitting the paper this morning, and I'm here, Rachel, to share with you. Top on the front page, Egypt's $7.5 billion complex exposes Nigeria's failure to tap $20 billion petrochemical potential. Now, this one is really huge, which is why it's going to be a topic for conversation with Mr. Philip much later. Nigeria is only 10% of its $20 billion petrochemical potential. That's a bullet headline underneath that one. Losing $10 billion annually in failure to develop petrochemical sector. If we're losing so much money on this, then why are we not having so much attention, on this sector right now? Well, we get answers from Mr. Philip. Right under that headline, we have this one. The inflation numbers were released just over the weekend. That was on Friday. And we have it right here. It's official. Lowest disinflation in 4 months keeps CBN MPC alert. Weak consumer demand keeps inflation at 17.75%. Analysts say trend will persist to help curb food supply disruptions around the economy. And then the third bullet point under that one, disinflation to influence MPC decision to continue holding policy rates, other parameters. Well, the meeting is coming up in a week. We'll see how that one turns out. The summary section, we have VP visits Vietnam with MOUs. That one's on page 3 of the paper. Finance and investment, stocks, choppy first half, no better second half. Page 11, catch that one. And the PIB subject matter, expert identify loopholes. Have you taken a look at the content of the PIB? If you have not, then just pick up Business AM, page 23. Experts already looking at it, don't like what we see here, what we see there. They're already pointing out loopholes. Well, catch the gist. Company and business segment, GT Bank, eyes on growth. That one's on page 25. Just jump right over to the commodities and agricultural sector now. Nigeria's $1 billion leather potential on page 26. Okay, I'm going to bring in Mr. Philip now to give us insight into all of this and more. Good morning, Mr. Philip. It's good to have you on the show again. How was your weekend?
Good morning, Rachel. It's always nice to be here.
All right. Okay, let's start with the first headline on the cover page now, Mr. Philip. Talking about Egypt's $7.5 billion complex, of course, exposing Nigeria's failure to tap 20 billion naira petrochemical potential. This is a huge challenge to Nigeria, as it is noted in the paper here that our failure to develop the petrochemical plant is largely the reason manufacturing companies are importing about 80% of their raw materials. That's worth over $10 billion, Mr. Philip. My question is, what can the government do to correct this, seeing as there is a massive opportunity in this sector?
Rachel, we've always talked here about what you and I will agree is a sense of laziness, especially with regards to Nigeria's having crude oil. You can even, before we go deeply into it, we can talk about gas. Gas is Nigeria has more gas than more than crude oil. But gas has not been developed to a level where it becomes the major earner or the foreign exchange or even income earner for the country. So you take that into, you have crude oil. Now crude oil, because of the laziness in the sense that once you bring out crude oil from the ground, you export it and you make money. You are basically a trader. You just trade on what the Western oil companies or international oil companies have brought in technology to develop. So you feel comfortable in that zone. That you can earn money, and that money that you earn is enough for you. Which is, this story is important, because on the back of having crude oil, a lot of things can be developed from it, and this is what petrochemicals, are about. So we have been sleeping on this. We have, 3 refineries or 4 refineries, 2 in Port Harcourt, 1 in Warri, and 1 in Kaduna. And the ones in Port Harcourt, the 2 in Port Harcourt and the 1 in Warri, I think maybe, I don't know whether Kaduna too, they were built, actually, what are they called? They are called refining and petrochemical companies, So there's one side of refining oil, which we have already lost, and the petrochemicals. Some analysts, people familiar with the situation have said that even Warri did not even get going with regards to petrochemical development. So it has not even cranked the facility you have there to go into petrochemicals. Yes. So they concentrated on just refining crude oil, and that is what you have had all this while. Meanwhile, if you take a look at the byproducts of crude oil, which when you refine and you produce, you have so many things that can be useful, for the manufacturing industry. Now, manufacturing is supposed to be a huge part of economic development, in terms of if you develop your manufacturing base, you especially with regards to the raw materials that you need for a lot of things, then you can begin to see yourself as a giant in that regard. So petrochemicals provide a lot of what's called raw materials that can be used by the manufacturing industry, and this has been the case, for decades and decades since crude oil was discovered, and then they started with petrochemicals. But in Nigeria, we have slept on that, and what Egypt has decided to do is to build a $7.5 billion petrochemical complex, and that has just shown that some other countries, looking at what potentials that they have, begin to dig into it. But Nigeria is not doing that. If you want to ask why is this the situation, I tell you the situation is the fact that when you produce crude oil, which is largely the work of Western technology. We haven't even talked about gone into the technology of producing the crude oil. A lot of this technologies are imported from abroad. So it's that sense of laziness. That you just produce crude oil, export the crude oil, make your dollars, and then begin to feel comfortable in that. But you don't want to do the hard work, of putting ideas or thoughts together to ensure that you develop your petrochemical industry, to be able to do that. So we have a situation where you have refineries are not working. So the refineries are not working. The refineries are supposed to be both refining and petrochemical combined. Petrochemical was abandoned and nothing was done. Even the refining of crude oil for petroleum products, has also been abandoned. So there's something particularly wrong with not having a deep-seated approach, to what we have and what we can use, and that is where the challenge is. Look at, you're talking about a potential for $20 billion, so you can create an industry around petrochemicals, that has potential for 20 billion. And what we are doing, we only do 10% of that, so you wonder what exactly is the problem. Why can't you push on that front? Because if you look at the different things that petrochemicals can be used for, you'll be amazed. You for instance, you have you have the sole petrochemical plant, the Indorama LMA Petrochemicals. That was supposed to be part of government owned in the past, until it was abandoned. Nothing was done with it, and then they decided to sell that off, to Indorama. And Indorama has developed that and is going on very well, But that is the only one. So that's what you're talking about, the 10% only that you're able to do. Meanwhile, petrochemical has a lot of potentials, and these potentials are so so huge, that it cuts across different aspects. Look at it. Majority of petrochemical and petroleum and petrochemicals products serve as raw materials input to other manufacturing industries. Road construction use bitumen, paints for building, ingredients for textiles, for clothing and carpets, foams for beddings and furniture, medicines. Read that, Rachel. Medicines for hospitals, fertilizers for gardens, lubricants for vehicles and machinery, as well as plastics and polymer. So you can see the kind of what we are talking about.
It's huge.
It's very huge. So why don't we just get on with it? So this is the challenge, and with Egypt developing the $7.5 billion complex, full complex, it opens our eyes, to the failings of policy or approach to particular areas of the economy, and this petrochemical is particularly one of these areas, and which need to be looked into carefully.
I totally agree with you. Let's move on to the inflation numbers now. We're expecting the CBN to meet next week and make a decision. What moves do you see them making?
Well, the inflation. Okay, so we will start by talking about one of the central role that the CBN has to central bank. Most central banks all over the world, is price stability. And if price stability is a key function of the central bank, then you will agree with me. Inflation is key. Keep inflation very low. What we're having here is not that inflation has gone away. So we are having what we call disinflation, which means inflation is still there. It's still high double digits inflation. But it is coming down. But it is not coming down at a rate where you can say that it's huge, because you have inflation at 17.75% for June. Is a huge number. It's not. You're looking at a central bank that came on board some 5-6 years ago, or 7 years ago, and had its target at single digit, keeping inflation at single digit. But Rachel, you and I know that they have not succeeded in doing this. We have written about this a lot of times. We have discussed it on this program. That it seems sometimes you want to pardon them. The economy, Nigeria economy, is in such a state that CBN sometimes has diverted its attention to other things, choosing what it called developmental approach to central banking. But the key thing is that inflation is a crucial one of the numbers that the CBN Monetary Policy Committee will be looking at when they meet, next week. Now, the inflation numbers is been going well. What has happened is that it's in the last 4 months we've had they said the lowest disinflation in 4 months, that the way we captured it in this story. But this has been happening because a lot of things happened last year. The supply chain, for food, food distribution in the country, was hampered. So inflation seems to have been high. But what has happened is that with the easing of the situation, so it appears as if the supply chain has started to ease off a little and began to help, the food inflation. Food comprises, in terms of the basket of inflation. Within the basket of inflation, what adds up to inflation is a key part of what helps to calculating inflation. So there appears to be some some toying in that area, and that it is helping the disinflation. Helping the inflation numbers to be coming down. But there's still a lot ahead. So when the CPN Monetary Policy Committee meets next week, they'll be looking at these numbers. They'll be looking at how the trend has been looking at the trend. When we say lowest disinflation in the last 4 months, they'll be looking at that and looking at all the factors that are responsible for this happening, and then that will perhaps guide them, to making a well-informed decision as to whether kitchen has been three areas, to look at, when the MPC meets. It's either to tighten or to loosen, or to just hold, But what we have seen with the central bank MPC in the last several meetings is that they have chosen to play it cool, by holding, because moving, what's it called, tightening or loosening, ought to be driven by clear fundamentals within the economy, but they haven't seen those clear fundamentals to help them to decide whether to loosen or to tighten.
Right.
So of course they've done one or two tightening in the past, but or loosening in the past, but they have not actually come to agreeing on in terms of being what you call hawkish or non-hawkish about it. So they have decided to play it cool by holding rates. They've held rates a good number of times, because they say the fundamentals within the economy, do not support, a radical approach to rate decision.
Right.
But the economy is highly influenced by what's happening with regards to inflation.
We'll wait and see how that meeting is going to turn out, Mr. Philip. Just before I let you go, it's going to be a very short trading week due to the holidays tomorrow and next tomorrow. So we just have 3 trading weeks this week. How do you see the holidays, shaping the outcome of the equities market by Friday? Last week we saw the market going south. Investors lost about 24.5 billion naira on the NGX.
I think a lot is built around what the numbers are going to be in terms of releases. Company releases for half year.
Okay.
The banking sector is well known for releasing half year results, and then for declaring some form of interim dividends and all that stuff, So you will expect that a lot of people, investors will be looking out for the releases, and already positioning themselves, for what's going to come, so you have a lot of stocks that will be taken up with regards to what's it called, to a interim dividend payout, that will come as a result of the what's it called, as a result of the releases that will come, the major thing is that the market, from what analysts are saying, will continue to be influenced by corporate earnings, and then investors positioning themselves for the releases that will come, from major big players, the banking sector in particular, the what's it called, FMCG sector in particular Dangote, the cement companies, to see what they are going to, the result that will come from there. So you see a lot of positioning for that by investors.
All right, it's been amazing having you on the show. Thank you so much, Mr. Philip. We'll do this again by Monday next week. I do hope that, I'm optimistic that this week is going to turn out great, both in the equities market and elsewhere. Thank you so much for joining me.
Thank you, Rachel.
And that was, you too. And that was Philip Isakwa. He's the publisher, Business AM, Nigeria's fastest growing financial and business newspaper. It's Monday. I'll give you an investment tip just before I wrap up the show. I'll be right back in a moment. Stay here.